Fellow traders, James Stanley with StoneX and Forex.com. It was a comeback kind of week in the dollar last week, and that continued the reversal from the week prior. Now, in last Friday's video, I looked at a couple of the factors that played into that reversal. And for next week, I think the big matter is dollar yen and whether that recovery theme can continue. But I want to look at the dollar from a few different perspectives in this video: dollar yen, euro dollar, pound dollar, and dollar CAD. Also going to take a look at pound yen as a way of maybe avoiding the US dollar altogether for right now. So let's get to the chart. Let's start looking at this from a few different vantage points and start chopping it up. So first and foremost, in the dollar, when we looked at this in the webinar a couple of weeks ago, as I said then, when we have this extreme oversold reading on the daily chart, not a good time to go chasing the dollar lower. And this was helped along by that comment from President Trump. He was asked what he thought about dollar weakness. He said, it's great. Well, a day later, Scott Bessent walked that back a bit. And then it was Friday of last week or the prior week where Kevin Hassett made a statement that ran very counter to that. He was talking up benefits of a strong US dollar. So it almost seems as though the admin wanted to walk those comments back a bit. And again, like I talked about last week, makes sense as to why. Because if we have an excessively weak USD, a larger push of carry unwind in dollar yen, it could potentially start to impact stocks. Not something that I think the admin wants to see ahead of midterm elections later in the year. Lo and behold, that pressure in equities continued last week, at least until Friday. And so that's another thing to keep our eye on. But let's get back to the USD. In USD, we had that continued rally through last week, and we now have a really big spot of resistance coming into play to hold the highs at 97.94. This is a Fibonacci level that has been in play quite a bit going back to April. It's the 38-2 retracement of the 2008 to 2022 major move, and we can see where it held the low back here in April, and then it became support turned resistance. This was the last kiss of support before we had the lower high that led into the current breakdown. Now, if we look at this just from a pure price action perspective, we do have a fresh lower low, and now there's the prospect of a lower high that could challenge those lows. Look at this longer term, that is something that could potentially take place. Now, I think what we would need to see for that scenario to play out is dollar yen reversing again. We need more of that carry unwind theme. I'm going to look at this in more detail when we get to dollar yen. But for next week on USD, there are a couple of really important data prints. We get NFP on Wednesday. We get CPI on Friday. There's also retail sales to deal with on Tuesday. So, especially NFP, CPI, I think those could have a massive impact here. The expectation for CPI is already a pretty low bar. It's 2.5%, which would be well below 2.7 from the last print. That's headline CPI annualized, by the way. But if we get a disappointing print there or a 2.3% or lower print, there could be reason for dollar bears to make a push here. Now, as always, it's the dollar basket. It's underlying currencies. If the dollar is going to weaken, it needs other currencies to strengthen. And vice versa. If the dollar is going to strengthen, it needs other currencies to weaken. I think for dollar strength, if you are looking to push USD strength, continued recovery, we're going to need to see dollar yen take a larger move here. Now, interestingly, there's a case of divergence going on. If we look at the last 3 weeks in dollar yen, you'll notice a very similar, albeit less emphatic version of that in the USD. We have the sell-off from a couple weeks ago. We have the pivot with a large underside wick from 2 weeks ago, and then we have the continuation last week. Again, not as emphatic in DXY as it is in dollar yen. And so this is just the additional implementation of yen weakness. Why is that yen weakness coming back? Well, the fear here was that we were seeing an intervention push. But as we go into Japanese snap elections this weekend, it really seems though Sine Takechi is set for a stronger majority in the lower house of parliament. Her coalition is widely expected to gain a 2/3 majority, which gives them more and more control over the economic reforms that she ran on, that she won on. And that goes all the way back to October when we had this massive breakout in dollar yen. Now, there is an inflation problem in Japan. There's no denying that. But Takechi's approach to this, as opposed to rate hikes, tighter policy, blaming the BOJ, has been the removal of a consumption tax. So there's still wherewithal for yen weakness in a Takechi win. The challenge is one of positioning. Because so far, it's that 160 level that has been defended a couple of different times by the Ministry of Finance. Back here in on its first test in April of 2024, didn't really work. This next test worked maybe a little too well. The next push up towards that level, buyers stalled out, didn't even want to retest it. And then again, in this most recent episode, buyers didn't even want to retest it. And as we got closer, we had veiled threats from Katayama of the finance ministry in Japan threatening to intervene if we have these one-sided moves. I think the comment that really started to get a lot of attention, again, something I believe I covered in these videos, setting this pullback into a lower high, ultimately leading to the larger pullback, was a comment from Katayama saying that she spoke with Scott Bessent and they were in agreement that they did not want to see one-sided moves in the currency. And it was like I pointed out, the U.S. seems to want a weaker USD, Japan seems to want a stronger yen. That's not a force I want to fight. Well, they both seem to really take a step back from that premise after we had this brief unwind episode. Again, we had that President Trump comment on Tuesday, followed by walking back from Scott Bessent on Wednesday, and then an opposite comment from Kevin Hazen on Friday. And you'll see this week or the past week, 5 consecutive green days in dollar yen as it just continued to come back. The challenge here, though, again, is as we get closer to 160, you got to question how much potential is left there, right? If we are going to see the USD pose a stronger recovery, we're likely going to need to see some element of breakout beyond 158, 159, maybe even 160 in dollar yen. Otherwise, we got the prospect of dollar weakness to work with. Nonetheless, if I'm looking for dollar strength, this is still the one that I like best. It's just about approaching the matter in, I think, a kind of a cogent way. 154.45 to 155 remains a really big spot. If we see any disappointment in those election results, like maybe the majority doesn't pull as widely as is expected, then there's motive for a pullback here. If we get a disappointing NFP report, a disappointing CPI report, or a below expected CPI report, there could be motivation for a pullback here. 154.45, 155. This is a big zone, has been since October, December. We get a deeper pullback. That's a spot where longs become attractive again. Shorter term, I think it could be justified down to a 156.27. But after we get above this resistance around 158, that's where it starts to feel like it gets kind of dicey. I got another pair for dollar strength I'm going to look at in a moment, but now let's look at scenarios of USD weakness. For USD weakness, this is the one that I like a bit more right now. That's euro dollar. I've been following cable for that effect of late, but we had a shift last week after the BOE rate decision. And so at this point, I think Eurodollar is situated a bit more attractively for that scenario. We had a continuation of the sell-off, the pullback on Monday, but it was largely just spinning its wheels for the rest of the week. At this point, there are 3 different support levels a bit lower that I think could all identify some level or element of capitulation if we do get bears making a quick push. Like, let's say maybe those election results come out widely in Takeichi's favor on Sunday or after the open. And we get a gasp, a run of dollar strength. Dollar yen goes up to test 160, and then maybe we get an intervention push. Just throwing this out there. In that setup, I think that dollar strength showing a pullback to a 117.48, a 117.17, or maybe even a 116.86 becomes a really attractive scenario to look for support to play into a reversal. On the upside, or for bullish strategies, we need to break that swing high to denote a short-term higher high, which then targets 119.09, 119.19, and then maybe even the 120 level. I want to be careful of expecting a 120 break right now. That's one of those major psychological levels. Often takes time, just like 115 on the downside, which held multiple spots of support back in November. Here, this is the same chart that I've been talking about on that one. We can go back and look where, historically speaking, 120, 125, 115, 105. These levels don't usually just give way easily. And I covered that in the psychological levels videos last week, specifically on gold, but also included some Eurodollar in there as well. In cable, we're not totally done on the long side yet. I mean, it's not totally cooked, but the move that we saw last week is something that you have to give respect to. And let's go from this one. There we go. And we had a BOE rate decision that helped to bring a pretty dramatic pullback in here. And right now, and this is the reason I want to be cautious of looking to get bullish, I have price testing resistance from prior support. So, like, if anything, this looks like an attractive area to sell or look for to get short if looking for price action to continue off of this 4-hour pattern. It can change, it can shift, but bulls have some work to do to turn that around. specifically looking at 36.23 here, and then above 37.68. That 37.68, this was the lower high before we had that continuation. That's the level that I'm probably going to want to see get taken out before I can get more confident that bulls are back in a very big way. I mean, you can see we're collectively here off the daily chart. It was well defended before we had that pullback and that slap, that strong sell-off move. But so far, we've maintained above 135. Bulls aren't completely cooked yet. They just got some work to do if they want to get back in order on this thing. I'm going to go over to this chart because I have a few other items that I think are important. So a way of maybe getting a bit more aggressive earlier on something like this, as opposed to waiting for 37.68 or 37.80, is looking for a break here of that 36.42 level. This was the S1 zone that I looked at just, I think it was last week, but I've been following this for a while. If we get a break of that and a break of this bearish trend line, then I can start to say, all right, well, the tide is breaking. We haven't quite taken out that prior lower high yet, but the tide is shifting. Strong reversal off that S2 zone, which, again, played pretty cleanly. Not perfect, but pretty cleanly. But this would be a way where I can maybe get a little bit more aggressive a little bit earlier. All right, last most certainly not least, I want to look at something else on the long side of the dollar that is not dollar yen, because that one's just been really messy. And we have, of course, Japanese elections coming in later on this week. In dollar CAD, it's the 135 level that I've been tracking here. This pair has been largely range bound for a decade plus now. We had that spill down to 135 just a couple weeks ago. And since then, bulls have been coming back a bit more. Last week was, again, not super emphatic, but the fact that we did have defense of this support level right around like 136.29, 136.43, the spirit of defense, if you will. I think this is something that allows to keep the door open. There we go. That's what I was looking for. Allows to keep the door open for a bounce to continue to play through here. Now, this isn't necessarily something where at this point I'd want to get like super aggressive, like all the way up to a 140 print, but the near-term price action is something where I could justify long USD, especially in a backdrop where dollar yen's been doing much of the drive, and we're getting close to a couple of very important inflection points there. That said, like I've been talking about in these videos, if you want to avoid the dollar altogether, that is very much a possibility. This is the one that I've been following as a cross pair, pound yen. It essentially allows me to take a couple of these prevailing themes and mix them and match them. So yen weakness, I love. Pound strength, again, still open to and cable, although it's a little bit messier there, but it's what I've been following of late. Combine the two, pound strength, yen weakness, and lo and behold, this one has been really pretty clean. We had 4 days of support at that prior range support level, right around that 210 handle. Breakout, fresh 18-year high, pulled back aggressively from that, but notice right where we stalled, right at the top of that prior resistance zone, like 211.59. And that's led to a really vigorous bounce. Again, I'm expecting Japanese elections to really run yen volatility, especially at the early part of next week. But there's a couple of spots that I think matter a lot. 212.60, 213.50. 213.50 would be a really tight level considering the backdrop, but that's the level I would ideally like to see held. But even if we pull back all the way to that zone, 211.42, 211.59, even that, I could be open with playing a retest. Because in essence, this has been a mean reverting type of matter. Not perfect. Again, we had that fresh high, but it's had some really good angles off of these prior price zones that I think could continue to play out until they're negated or nullified. But that, my friends, is what I have for next week. That's what I have on the radar. As always, thank you for your time and happy trading, ladies and gentlemen.